multiple time frame. That is how you're going to find much better, higher probability trade setups. You understand now how to use your structures in the market. You understand about the simple way of looking to mark up your areas of supply and demand after you've done your structures. Now let's look at the best time frames to use when you're looking to take a trade, understanding the use of the multiple time frame. Now in this video, the third video of this playlist, which I do hope you've watched the previous two videos already, then we can understand how we're going to use a combination now of those timeframes to find the best setup. Now, what I'm going to suggest here are a few different suggestions. If you want to be more of a swing trader, then you're going to want to look at trading, okay, the daily time frame as your major swing time frame. Then look at your 4-hour time frame as your medium time frame, to then look at either your 15-minute / 30-minute time frame for your entry. That's what you're going to be looking at when you're doing a swing trading, your 1 day, your 4-hour, and your 30 to 15-minute entry time frame. Now, if you want to be more of a scalp trader, then you want to be looking at a 4-hour as your main higher time frame. And then you can look at your 15-minute or 30-minute, okay, as your medium time frame, and finally the 5 or the 1 minute time frame as your entry time frame. So they are where you're going to have as a scalper or as a swing trader. So it all depends whether you want to be a swing trader or looking to scalp those markets. Now, even though it's classed as a scalper, it doesn't make any difference on how you're trading. It just means you're looking to take your entry and your exit potentially on the 1 5-minute time frame with potential use of the 15-minute for your next final target. Now on the swing trader, entry on the 15 or 30-minute time frame, looking for your potential targets on the 4-hour time frame. Now we've covered that, let's just remove all of this. And what we're going to do now, using this combination, first let's just mark out those structures again here on for the daily time frame. I like to mark mine off. So we're going to have a breaker structure here, potential weak low, and because we've already done our supply and demand, we understand this is a potential area of supply. So we mark that as a swing supply. Then we'll drop down to our weekly, how I like to mark up my next areas with my internal structures. And we understand this is our last break of structure. So it's going to be my internal breaker structure. This will be a weak low, but this would be my last area of internal supply. So now we have that already marked on the chart. Let's just find that internal supply. This now gives me the daily. Okay, so I now go down to my daily. So once I understand, I'm looking at this as my daily, using multiple time frames. When price comes back into your area on a higher time frame, being this on a daily internal structure, what you really want to be looking for is either a push out of your internal structure or the shift back up into your swing, okay, area of supply for your entry out. Either way, internal structure or your swing area, okay, of supply or internal supply, that's where you're using your higher time frame. Main time frame of choice is going to be your medium, your middle time frame, which on this case we'll be looking at a 4-hour. So when price comes up into this area, we'll be looking at a 4-hour. So we can mark this out, this full zone. Let's mark this out as a 4-hour, okay, swing supply. Where are we for our swing supply? Down here. And we'll mark this out as our 4-hour breaker structure. I know I've already been through this if you watched the previous videos, but it's good to go through and understand again. So now once we've done this, we want to look at this area on the chart. Okay, now for daily, we can identify we had that breaker structure here to downside on the daily, so it's easy to look at this now. We're on the daily as our breaker structure. This is then going to be my fractal area of supply, which will be an internal area on a 4-hour. And then we're looking for continuation to run this low. And finally, we can identify this is our last area of demand for where we expect price to run to on internal demand. So now we drop down to 4-hour. Now we have our next time frame of choice, okay, is a 4-hour time frame. So we identify this is our higher time frame. Once we've seen a shift out on the 4-hour, we identify our 4-hour, okay, internal supply. So we've got our daily internal supply, higher time frame. Now we've got our new area of supply. Once we understand this area here, we've had a break to downside, a pullback into supply. looking for that continuation. So now you have your time frames starting to align. Okay, we've shifted out on a 4-hour, created a new internal supply out of this higher time frame of a daily internal supply. Next thing we're looking for is going to be your area, okay, on the next time frame. Remember, it was going to be a 15 or 30-minute time frame. So we'll look at a 30-minute. So once we identify price pulling back into this area, which we'll now mark out on our lower time frame. Okay, so let's mark this out as our area. This is going to become our swing structure. So we're looking at a break of structure. And we do have another break of structure we can mark here as well. So we do have a shift. So this isn't the best example, but it does show you. This would then be your current low in the market. But because we're understanding the 4-hour right now, we're looking for price to run to this area of demand. So that's how you can start using your areas of demand. So when we do pull back into this area, let's go to a 30-minute time frame. This is the understanding of the 3 time frames when you're looking to create your trade, where you're looking for your potential opportunity. So now we have your 30 minutes. Okay, we're coming out of a higher time frame. So once we have price coming into this area, we're having a break off structure to downside, we're pulling back. Let me just go back to that 4-hour. Okay, so this is our 4-hour time frame. Okay, swing structure, internal. Okay, breakout there. If we go back to daily, just so you can see how we're linking all this together. So here's our internal structure on a daily. Okay, with our internal supply on a daily became a swing area of supply on the 4-hour. Our internal structure out here on a 4-hour became my area of swing supply on the 30 minutes. Go back to that 30 minutes. Okay, so there's my swing area supply. That's how we got to that, understanding on multiple time frames. Now, once price comes up into here, we can go back to the 4-hour again, and we can start looking at a fractal structure. The fractal structure is going to give us our internal structure now when we're looking at the lower time frame. So my last fractal breakout is this area here. That's going to be a IBOS. We're also going to have our last area of potential demand sits there. We're going to break out the up, that's our area of demand. So we can make that an internal demand. And then we can also have this as a breakout. This creates an area of internal supply, where we have the last, should use that move there, and that's going to be our internal supply. Now, if none of this is making sense, then don't worry, you just want to go back and watch the first 2 videos in this playlist. So now we drop back down to that 30-minute once again, and we'll find that location to see where that is. Okay, let me just zoom out. Here we are. So now we have that internal area of demand. We've wicked through it, so it's removed this area of demand, and you'll be looking for continuation lower. So we expect the price to want to run this week lower in the market. So now you have used multiple time frames to align for your best potential trade entry. You've gone through from your daily to your 4-hour, now to your entry time frame. Now you want to follow really your medium time frame, which is that 4-hour. This is going to be that swing move on the 4-hour where we're looking for price to want to run towards. So that's your internal structure, and it's also going to be your swing structure we're looking here on the 30-minute. Now we did break out here to the upside, so it is a counter trend, but you have to remember we're now looking at coming out of this higher time frame of swing supply. Now the higher the time frame and swing supply over internal will always obviously be more stronger. So when we look at price here, breaking to the downside, removing this internal area, we're pulling back to internal supply, we can start looking at your fractal structure again. So you had a break here to the upside of fractal structure, break back to the downside, leaving a new era of fractal supply. So now you have your fractal supply in the market out of your internal supply. You have your internal supply coming out of your swing supply. And that's where you start to bring it all together, where everything starts to stack in your odds, in your favor of when you're looking to take a trade. and you're going to see how price drops out of this fractal area of supply and does run down to this line. That all comes into the next video when we go through exactly how you're looking for your entry and your exits when you're using this type of strategy. So watching this full playlist is going to hopefully bring everything together for you. And again, if this is helping you, don't forget to drop me a comment below this video to let me know, okay, these videos in this playlist is helping you to understand the way I look at marking on the charts, okay, with our structures, our supply and demand, using multiple time frames that we've gone through just now to start looking for that entry model. But make sure you watch the next video coming up, which is going through the final video of understanding the way we look at using all this together to find your entries and your exits, okay, with mastering this type of trading.